So I think we just proceed without these other guys. They'll just watch the recorded video. So basically, I have a major trend line on the daily time frame. I have this major trend line. If you check from when VIX started this trend line, first touch, second touch. So this first touch, second touch, they are very key because they actually guide you. Even on this third touch, that was an opportunity. If you check how long it bought from there, so many days, if not weeks. So this trend line is a very key trend line for the VIX, because if you check, VIX has been above that entire trend line. Ever since it was launched, VIX has been above this trend line. So now, if ever it breaks this trend line, that one now, it will now result in a lot of, what can I say, swing moves to the downside. Major swing moves to the downside, because above this trend line, when it comes to the issues of trend line, you know that above the trend line, mainly the buys. Then below the trend line, we expect the sells, and the sells. So the sells have to be many below the trend line. They have to actually be many below that trend line. So if that does not happen, if ever price comes to that trend line and respects it, we simply actually expect buying opportunities. We simply expect buying opportunities, just as you see price has been respecting this trend line, came, respected. So yeah, can also come and respect as well. So we're still in that whole action of once we get there, once we get here on the trend line, you go to a smaller time frame, 15 minutes. Once you get a rejection, bullish candlestick confirmations, you enter. Then we see how price will react. But currently right now, price, as you saw, price was in a range. But right now, it's sort of like breaking the bottom here. If you check from the morning, there were not really right. So I was saying since morning, if you check, price didn't really fully confirm to say right now the trend is bullish, because if you go even to smaller time frames, price did try to break out of that downward channel, but never really broke market structure as a whole to say right now we are now in a bullish momentum. And it didn't even get any bullish chart patterns like the double bottom or the inverted head and shoulder or the triple bottom. We didn't get any of those. So basically since morning, you realize that we didn't get any buying confirmations as such for us to fully buy this thing. So now we can see that price already has broken out of that level, which it was respecting for a while. So right now, this candle is closing in 30 minutes. This 4-hour candle is closing in the next 30 minutes. So now once it closes this one, most probably the scenario that we expect is for price to come back, then give us a rejection, then boom. So this target now, the first target after we enter, the target now we're looking at the trend line that we drew on the daily. Trend line that we draw on the daily is what we need to watch out for now. This trend line here, once we enter there, this trend line now is key, a very key zone there. So price can reach there. It can take a day, if not a day and a half, because the retest can happen on the 4-hour, then it goes. So it can take a day, if not a day and a half, for price to fully reach this trend line. Once it gets to the trend line, you just need to watch out now and look for what price is going to do there. So that will be the target for the sales that you take after the retest. So right now, if ever you're not already in, you simply can wait for the retest or the pullback to the zone. This is the zone broken. You simply wait for the pullback. So someone could have entered earlier. Someone who entered earlier could have entered after the break of this lower low. This lower low. So if you check now, even on 4-hour, why am I saying since morning we didn't get any bullish to say that the market is now bullish? Is because of this, right? So this is a lower high, right? This is a lower low. So price came and created that lower low, but now as it pushed, it never even reached this lower high. So for us to fully say the market is now bullish, it has to come and break this lower high. Once you see the market breaking the lower high like that and making a higher high there, that's where we can say the market is now bullish. We are simply talking about a situation like this. We're simply talking about a situation like here. So here, if you check now, we're simply talking about a situation like this. Price going down, lower high, came back to this low, failed to make a lower low, first sign. Second sign, breaking this lower high. Definitely one could have even entered after the break here. Then your stop loss just below, depending on a smaller time frame entry. The bullish confirmation was there. Even here, you can also draw trend lines. Besides trend lines, you can also look at the market structure. Simply looking at the market structure. So there you realize that the lower high, price was moving, lower high, lower low, 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 lower high, lower low. So now it came back to the lower high, which is this area. Came back to the lower high. And if you check after coming back to the lower high, it broke the lower high. So after the market structure has been broken like that, that's where we now actually anticipate fully buying opportunities once market structure has been broken to the upside. So this was the break. This break, and it actually came back to retest. So you could have entered, this was more than a day of holding. 4, 8, 12, 16, more than 2 days, just from here to there, before it came back again to pull back, went again, pull back again. So if you check all these pullbacks, they were happening on top of this break. This break happened there. All these pullbacks, they were respecting this area. So there you could have entered, there you could have entered, there you could have entered as well. So this one, it had confirmations to go bullish. This one had confirmations to go bullish. This one of today, no confirmations to go bullish. No confirmations to go bullish, meaning we were still bearish because the market actually created a what? A lower high again, which is something that we don't want whenever I want to buy. Whenever I want to buy, the market has to make higher highs and higher lows. So now it failed to do that. Lower high, lower low, lower high. So from this lower high now, your entry, you could have either waited for this break of this lower low on a smaller time frame perspective. Once it broke like that, you enter, or you wait for the break like that, then the retest. The retest here, it can even retest all the way here, then close below. It's still fine. You can still take even trades there on that zone there if it rejects there, because we don't want a scenario whereby it closes below, then the next 4-hour candle closes inside. If this happens, this will be a fake out, and once it's a fake out, price will go back inside, then touch there, then boom, then go up. So just in case that does not happen, you simply need to wait for the rejections. The rejections are key on a smaller time frame entry that you'll be entering. The rejections are key. That's why you don't just enter. You wait for the rejection, then you enter. So now, already this one is closing below our zone. So once that has happened, we simply want a pullback. A pullback. We simply want a pullback. a pullback on a smaller time frame. Even on the 4 hour, we also want a pullback. So the pullback, once it happens on a smaller time frame, what we are looking for is simply rejection candlestick patterns. Rejection candlestick patterns. Right. So this is the situation. So where could have one entered the sell? I just want you to show you how you can enter sales smartly. So long you know that the trend we are still bearish, because this trend was still bearish. This was still a bearish trend. And so long the trend is still bearish, you know that selling opportunities are always going to be valid. So now here it created this, we have this area here. This area, the price came, then bounced on this area, created this level. So after the creation of this level, the break now of this law here, the break of this law, you could have entered sales, because you know, number one, the market is still bearish. We are still in a bearish market. We are still forming lower highs and lower lows. So there, break, it actually came back to retest. You could have entered, your sell there nicely. Your stop loss above there. So that was the first entry point. The second entry point, you look at this law here. So the break of this law again as well, it was an entry point. The break here, you could have gone to, if you go to a smaller time frame, you actually see it more clearly. The break here, this break, and it never even retested. The break, you could have entered sales again there. Then now this break again, this break here, you could have entered sales immediately here. You could have entered here. Your stop loss just above, because just in case it comes back and pulls back and creates a weak rejection there. So just in case, you just put your stop loss above there. So now, first, second, third, the fourth entry now is now the pullback. The pullback to that entry, the pullback and the rejection. Is it going to pull back all the way there, or is it going to respect here? If it respects there, we'll simply enter there. If it comes all the way there, we'll also enter there. So all those entry points, so you see on 30 minutes, it was more clear. This break, more clear, you could have even entered immediately here. Immediately there, your stop loss just above this 30-minute candle. This was a $7 stop loss with a minimum lot size. $7 stop loss with a minimum lot size. You would have entered just like that. So now we are waiting for a pullback, then we continue up until we reach that trend line that I showed you. Up until we reach that trend line. So that is the thing that we're waiting for now. Slight pullback either here or here. Then to that trend line. That is the target. That trend line is the target for now, because it can reach there, then begin to bounce and go all the way to the upside. So that is the current lookout right now for the VIX. Those sales, you could have gotten them nicely. I showed you on the 4 hour that market structure on the 4 hour. That is why you actually need to look at the higher time frames most of the times. Smaller time frames like the 15 minute, 30 minute, 5 minute, 1 minute. When it comes to you looking at the shift in market structure, you need to look at the higher time frames. They also have to shift their market structure. Here it was okay. One could have entered a buy on this break and retest, but now that buy could have closed either it's small profit or break even, because after that happened, after this market went all the way there, the next level that you are looking at is this area here. So that area now, if you check, price broke and failed to retest there. So now you could have even shifted your stop loss to break even, or even below this one. Check, price went down all the way, came back here. So as it came back here, one could have entered a buy thinking maybe this is simply a retest too. You would have entered the buy, yes. Your stop loss just tight above the level there. And the stop loss is not even big if you check. If ever someone took a buy there, let's say someone took a buy there, the stop loss is not even too big. If you check, it's actually a $3 stop loss with a minimum lot size. $3, imagine. So then it goes, then comes back now to take him out. Either at break even or that small, it was still going to be fine. But now as it broke this level, so the 4 hour now, it's good for showing you that the whole entire market structure without all the noise that you might find on the 15-minute, on the 30-minute. So looking at the market structure, that's why you even see whenever we're looking at the entire trend, we don't look at the smaller time frames. When we're looking at the overall trend, we look from the higher time frames. The smaller time frames, we really like them when it comes to entry points. Entry points, we just go to the small time frames for entry points. So market structure, according to the 4 hour, was still bearish. As I showed you, price never created a higher high. It still continued making lower highs and lower lows. So market structure was still bearish. And so long market structure is still bearish, all the break of these lows, break of these lows, you enter. Break of this low, you enter, because market structure is still bearish, meaning price is still going to create lower lows, meaning it's going to go lower than this, meaning if you enter after the break of this low, it's going to create a lower low. So that is the whole concept. So now when the market structure shifts now to be bullish, you know that all higher highs are going to be broken. So meaning the break of every high, that's where you'll be entering. Break of every high, you'll be entering. Break of every high, you can also enter. So that is also another thing that you can look at and consider whenever you're entering these trades. If you look at the market structure that you're in, are you in a bearish market structure or bullish market structure? Then you simply respond according to that. So now I still expect a pullback, either to here, then it continues. I'm still expecting that. To happen. So now if ever you're not in already, it's simply waiting time now. It's simply waiting time now. So now I hope it doesn't go straight to that trend line. I hope it doesn't go straight to the trend line before pulling back. It's far. The trend line is far. It's far. So yeah, we still expect the pullback. To happen. So just check out now and wait for the pullback. Once you get the pullback and you get your bearish candlestick patterns, you can simply enter nicely. Then the target will be that trend line that we saw. That is a target, because once it gets there, some things can happen there. It can actually shoot all the way to the upside if it actually maintains that trend line. It can shoot all the way to the upside. So now I'm simply looking forward to that. That pullback. That's the current lookout right now. That is what we are currently seeing on the VIX. We are simply waiting for a pullback. Once we get the pullback, we jump in.
It's okay.
Yes, so I hope it's clear. So everything, if you check, even the moving averages, they still were maintained. They were not. If you check on the 4 hour, let me just put this one. This is a 50 exponential moving average. Let me just go to a lower time frame. The one that I told you in the morning that you can actually use it for swing trading when you want to know when to enter or when to come out. So if you check on the 1 hour, this 50 exponential moving average, because the 1 hour and the 4 hour, the 1 hour is also better. It's also better. It's not really noisy compared to the 15 and the 30. If you check on the 1 hour, price actually, so this buy that happened, it failed to come and break above the moving average. So you could have also used this moving average either, because remember, we told you that moving averages are dynamic levels of support and resistance. So basically when it's above the market like that, it's acting as a resistance. So here it bought, reached this resistance, which was the moving average, which is the dynamic resistance, and failed to break the resistance. So it's like the market came to a resistance and failed to break a resistance.
Okay.
That is the whole concept. So up until when you see the moving average, either on the 4 hour or on the 1 hour, the market going above it, that's where most probably you can begin to see that most probably the market structure is turned bullish. Even the market structure itself will also tell you that most probably now it has shifted. But so long it's still above there, sales are still continuing. It's still a continuation of sales all the way. So if you check on the 30-minute, that is why I said the 4 hour and the 1 hour, when it comes to really identifying the trend, they are good. They are not noisy. They are so clear. There's no noise on the 4 hour there. There's no noise on the daily. 1 hour, yes, it's also okay. So this one, 30-minute already the broke here, which was good. But if ever you were looking at all time frames, you would have seen that here on the 1 hour, it is a level of what? Of resistance on the 1 hour. So I believe you actually are getting something out of this. I believe you're getting something out of this. So now pull back either here or here. So that is what we currently are looking at right now. A pullback. Once we get the pullback, we simply enter ourselves all the way to that trend line. All the way to the trend line. Yes. So I hope everything is clear. No questions?
I don't have any question now. Okay. I'm just waiting to end.
Okay. It's fine. It's fine. So this trend line is a key trend line. Have it on your chart. Have it on your chart. It's a very, very key trend line. Has been respected for a long while now. So it's a very key trend line, that one. Just observe and have it on your chart. Right, so that is it. That is it. That is it. Once you get the pullback on a smaller time frame, you can enter. You can enter the cells. Okay. Yes. So that is it. We'll talk much in the group, and we'll be discussing whatever will be happening there in the group.
It's okay.